So one, when we look at what's happening in Sudan and South Sudan, there's a lot of argumentative sort of debates that are occurring at this stage because of oil revenues, and we know that Juba is accusing Khartoum of aerial bombardment. So things not looking that safe right now from a political perspective. Let's just paint the picture as to why a lot of the East African companies want to head into this space, because they find a lot of opportunity. Yeah,
it's been a bit of a disappointment, hasn't it? I think a lot of, you wouldn't have expected that these hostilities would have accelerated at such an exponential rate. I think there's been a lot of foreign investment been looked at South Sudan, and the Kenyans have been moving to South Sudan since 2005. And there's been quite a lot of banking activity from the Kenyan banking sector into South Sudan. You've seen Kenya Commercial Bank start since 2005. There's been a lot of foreign interest in terms of infrastructure development, construction. And I think it's disappointing that you probably would see some form of slowdown from an FDI perspective into South Sudan, and particularly from a lot of the East African community, particularly some of the Middle Eastern banks. Like
so is this slowdown already occurring?
Well, I don't think so. I think the Kenyan banks have been quite bullish in terms of South Sudan, but I think certainly if the hostilities continue, you would see that there would be a substantial slowdown from banking sector perspective.
Okay, so let's just touch on the banking sector. Obviously want to ensure that the multinational companies that are going to be headed into this space do have a sufficient and an effective banking system. We also see retail being one of the big focal points as well. Do you think this is a consumer-based growth that we're seeing in that country, or do you think that it's also coupled with consumer relative to what we see on the multinational front?
Eleni, let's step back for a second. There was no banking system, and that was the key issue. Kenya Commercial Bank and a number of the Kenyan banks stepped in to try and form some remnant of a banking system. Now that we have some remnant of a banking system, when you have these type of hostilities, this banking system cannot grow. The thing that concerns me is the fact that South Sudan is bordered by 6 countries. So apart from North Sudan, you find that trade with South Sudan becomes increasingly difficult, because goods moving to the country, sort of international forms of payment, really become non-existent. It becomes a cash-based society. So as a result, it becomes, growing that particular banking system becomes increasingly difficult. The other issue is probably between 1% and 3% of South Sudanese are actually hold bank accounts. So whilst this is a
very low
large
penetration, obviously,
it's a large market. With a low penetration, how do you, grow that particular banking sector when you have hostilities continue?
So we're talking about banking the unbanked. So we're actually looking at, targeting the lower income earners. But there's also a lot of reticence with regards to this, because as soon as you head into the banking sector, you've got to make sure that you've got sufficient ATMs, and that people are going to be very happy with this scenario. KCB, as you mentioned, has been in the country for quite some time. What kind of headway has it made? I'm sure it's got majority market share at this point as a Kenyan bank.
Absolutely. They have about 20 branches now in South Sudan, which is very large in terms of the banking sector. We have Equity, Co-op Bank, Qatar National Bank, Bank of Khartoum, National Bank of Abu Dhabi, and most recently Standard Bank that has made an entry into the market. So I think we will see a continued growing banking sector, and I think particularly because these banks, one from a regional perspective, have been quite used to South Sudan, have been operating in the market for quite a while. I don't think that they will sort of cease operations there, but I think we would see a slowdown, and that will be commensurate with some slowdown in terms of FDI.
Okay, so let's also just touch on margins there for the banking sector. One would assume obviously very low margins, especially in initial phases, but then obviously it's all about volumes.
Well, I think banks entering into that market from the reports that I've been seeing want a return on equity in excess of 20-30%. They're looking for higher returns.
So this is a margin game.
It is a margin game. Although banks have not been lending that much, I think what they've been wanting to do is provide basic banking services. So if you're looking at sort of just their non-interest income, I think is going to be a larger contributor than actually lending income within South Sudan. And I think this is the reason why the country has been particularly attractive.
Absolutely. Okay, well, this is quite interesting, because we know that banks, especially in a saturated market such as South Africa and other countries as well, that a lot of the revenues do come through from unsecured lending, or at least mortgage loans and things like that. Obviously, it's a very new market, so that will still take some time. But obviously, as soon as that does start happening, we could actually see potentially large growth numbers coming through from these banks.
Absolutely. I mean, we've seen that similar, I would say that South Sudan, I wouldn't want to compare it to Angola, but I think coming out of a similar civil war like Angola did, you can actually see the booming banking industry now in Angola, higher growth rates, higher return on equity, and I believe that there will be continued interest. It's just disappointing that you had this sort of stop-start, and particularly since July 2011, there was, you know, opinion that there would be some sort of conflict, but we didn't expect it to.
Would you want exposure as an investor to Sudan, and then obviously heading through one of these, for instance, the African banks that are currently operating there?
If I was a hedge fund, I would say yes.
Okay.
But as a commercial bank, I think you need to be a little bit cautious. I think if you are familiar with the territory, like most of the East African banks, then I think you'd be able to have a sort of good ground intelligence. But as a new commercial bank investor that's not sort of really au fait with the East African market, particularly South Sudan, I would say, no, I would be hesitant.
Which have you now dubbed as the best growth area within the East African region?
Well, I think Kenya, Uganda, Tanzania particularly, and I wouldn't ignore South Sudan. What I'm saying is that I think investors would be cautious in there. It's still a high growth country, but I would put my money basically on the East African bloc, being Kenya, Tanzania,
Out of
Uganda.
the whole of the African region, you would say East Africa?
No, I'm saying East Africa particularly.
Okay. And what about West Africa? What is your view on that region?
Well, Nigeria continues to be
so oil-producing countries, I'm sure, very
well,
attractive.
Yeah.
Fantastic, Suresh. We have to leave it there. Thank you so much for joining us. Great to have you in the studio.